Manish Gulati, Executive Director at HEG, to understand what's in store. Manish, good afternoon and welcome to the show, and a pleasure to speak to you as well after really long. Taking into consideration the seasonality and the kind of cycles that this business goes through, this quarter, yes, top line has seen a sequential improvement, but your rising raw material prices, whereas your lower graphite electrode prices, that has played a deterrent. How are you looking at the coming quarters as well? Because this time there is disappointment.
Afternoon, it's a good opportunity for us to clarify, and we have mentioned that in the note of our results, that this loss which you're looking at Q4 is actually not an operational loss. You see, we have invested about a 10% equity by buying 10% equity in one of the big electrode companies globally, which is called Graphite. And we have mentioned in point note 4 that it is this loss is shown because of mark to market. So you every time, every quarter, the closing share price is taken as that mark to market, and that loss is shown in other expenses. And we have mentioned that it is 160 crores for the Q4 and 80 crores for the whole year. So if you add back 160 crores, actually we have one of the best operational profits of 82 crores for this year, and EBITDA margin is the highest. So I think people sometimes fail to distinguish or add back these things, but it is important to take a note of this, that it is not an operational loss. It is just because we have that significant investment in equity of our competitor called Graphite International USA, and this is because of that.
For how many quarters are you going to consider taking this into your P&L then?
I want to see, it's already seen one of the lowest prices. So going forward, I don't think that we'll see that anymore. And these are unrealized gains or losses either way.
Why accommodate that in your P&L then?
This is the rule. This is as per accounting standards. If you put it in other expenses, when there's a gain, you have to put it in other income. When there's a loss, mark to market, there's no other place but to put it other expenses. So once we had taken a call on that, so every time now we have to show in other expenses and justify to you and other investors.
Okay. Manish, apart from that, if you have to look at the numbers on a year-on-year basis, there is a decline in terms of the revenue, and the pricing trend in terms of graphite electrode is also under pressure. What is the trend looking like in terms of FY26 on both these aspects? Because you do have a tailwind where, if I'm not mistaken, one of the global players has shut down, which automatically gets business to the Indian players like HEG and a Graphite India, right? So how are you looking at FY26?
So let me first talk about the supply correction, which is the latest news that Resonec, one of the large players, they shut down 45,000 tons of capacity, 30,000 in Malaysia and 15,000 in China. So that is almost a 21% reduction of the capacity. And if you have been tracking us and our industry, in the last 18 months, there have been declines in other capacities as well. Graphite reduced capacity from 230,000 tons to 178, which was a 23% decline. Then there's another Japanese company called Tokai. They reduced from a level of 96,000 tons to 72,000, 25% decline. If you put all this together, it's a decline of more than 120,000 tons over a base of, let's say, 750,000 tons. So all in all, it's almost a 19%, 18.5% decline in capacity. Now going forward, the second question was about pricing. Pricing through the year of 24-25 has remained under pressure. It continues to be, now the pricing have kind of stabilized at a level. And going forward, for April to June and let's say July to September quarter, we expect our average pricing to remain at a similar level. But beyond that, we are looking at least expecting the prices to start firming up. And our peer group have already declared, and they're giving indications. They're talking about 15% rise, 20% rise. I don't know how much of that will eventually take place. But yes, towards the end of this calendar year, we are definitely expecting prices to firm up.
Point taken, Manish. This is Harsh here. Uh, so you spoke about how pricing is likely going up and there is an upside bias to that. Why aren't you as bullish? Because if peer group is saying 15-20%, are you trying to be conservative, and therefore what should your FY26 numbers actually look like in terms of growth?
Yeah, I'm conservative only because of the fact that the steel production is still low. If you compare this quarter, Jan to March versus last quarter, there's still a 1.1% decline. So we are being a bit conservative about it. But with the supply side correcting, we hope that when the market grows, some opportunities will come our way and we'll be in a good position, because we have a 100,000 ton plant at one place. And if we compare it with the average size of, let's say our average size of, if we look at Resonac, the average size of, let's say 50,000 ton plant, and Graphite of a 60,000 ton plant, and Tokai of a 25,000 plant. So our economics, being one large plant in a place like India, is really helpful, that our cost structures are lower. We're not in Europe, not in Japan, not in US. So that way we can compete. We have as good quality as them. So we are in a good position, I would say.
Sorry, sir, and are price hikes being implemented on ground? Are you seeing that happen? And what about in your case? Are you looking to implement any price hikes? If so, what will that indication be?
Our expectation is that, let's say, towards after the first half of this year, after H1, see, any company, we are not making electrodes today for tomorrow. Any company like ours is usually booked for the next 2-3 months, obviously, because we are not taking an order today and shipping today. So once these prices started to firm up, they may take a little time to take effect. Whatever they come up with, I'm not sure it'll be 10% or 15%, but green shoots are there that yes, prices should start to firm up. And as you have seen with all our peer group, at this level of pricing of graphite electrodes, the high cost plants eventually end up closing down. So this is a clear indication that these prices are unviable, unsustainable, and eventually have to go up.
Right. Manish, just stay with us. I just want to quickly address our Hindalco, a strong set of numbers in terms of the top line as well as the profitability. It has beat street estimates. If you talk in terms of the revenue, 64,890 is what the revenue number has come in at, versus an expectation of 59,251. In terms of the profit number as well, the number that we were expecting was 4,355 odd crores. That is coming at 5,283 odd crores. So that is also a beat. And if you see in terms of where the EBITDA goes, I'm just going to wait for the EBITDA number to come in on the screens right now. But in terms of the top line and bottom line, it's an absolute beat. The stock seeing marginal gains of around 0.7%. If we can quickly have the EBITDA number on the screen, 8,836. The expectation was 8,047. So a strong number from an operational perspective as well, which will clearly tell you that the margins are also a beat. So a very strong set of numbers that are being reported in terms of Hindalco. And the expectation was that the outperformance would be coming in from the non-ferrous space. It's the high alumina prices that is going to aid EBITDA growth as well. And low copper profit on a sequential basis probably would offset the impact of high aluminium prices. Novelis adjusted EBITDA per ton shipped was also down 9%, but taking into consideration the way Novelis numbers panned out, expectation was of a strong Hindalco quarter, and it's beat street estimates. The stock not seeing a major reaction yet, but we will come back and revisit this one. Manish, my question coming to you now is, if I have to look at the historical side, I think a year that this industry saw back then in 2019, I think 6,500, 6,600 odd crores was the kind of top line you hit as well. How long do you think will HEG take to come back to a 2019, to make a repeat of 2019? And will it also be possible to make a repeat of 2019, or is that something which is absolutely impossible now?
That was once in a lifetime thing to happen. Of course, we wish, our investors wish to see that time once again, but we may not reach that level. But certainly, once prices start to firm up, I think I can see the turnovers going for HEG going up, and especially with additional volumes. We may not reach that to 2019, because that was something which happened with a jerk, that suddenly the polluting industries, polluting blast furnaces in China were stopped, and the other parts of the world started making more steel, and there were no electrodes to be found, and we were there. So there was a period, a good 2-year period, when there was no inventories in the market, supply chains were tight, and we all in the industry made a lot of profits. So we may not be able to have a return of exactly those 2019 times, but these are one of the worst times we are going through. And if we can sail through the worst times, I think anything which happens, firming of our prices, whatever they increase to 10, 15, 20, I don't know, this year or next year, will definitely be very helpful in improving our margins. And another thing positive which we feel about our industry and HEG is that the new electric arc furnaces which are coming up, we are anticipating, and also our peer group anticipates similarly, that we are anticipating an additional demand of about 200,000 tons by 2030. And we can see these things happening on the ground. So more shift from blast furnaces to electric arc furnaces happens, more electrodes are required. So we think that medium term, long term, we have a very bright future.
So, so I understand that in the near term it will be difficult to try and give us some visibility with regard to margins. But what would that target margin, reasonable target margin number be when you're looking at it from a slightly medium to long term perspective, since you do have that visibility?
Somewhat. Whatever I have, I can share it with you.
Absolutely, sir, please.
So see, if you last year 24-25, we were at an EBITDA margin level of, let's say, around 19%. So that I think will continue for Q1 of 25-26, Q2 of 25-26, and thereafter we are expecting it to improve.
That's with regards to the overall outlook from a margin perspective. Thank you, Manish, so much for joining us on the show and having that candid view.